Welcome to Daily Crypto, Episode 9. Today, we're diving into the latest movements and news shaping the cryptocurrency landscape right now. We'll unpack significant price shifts, regulatory updates, and, some interesting developments across various projects. Okay, let's unpack this.
Absolutely. It's a fascinating period, definitely.
Mm-hmm.
And what's really striking is just the sheer breadth of activity,
Mm-hmm.
across different sectors of the crypto world.
Yeah, definitely feels that way. Let's kick things off maybe by looking at the market overview. We're seeing some pretty significant jumps across the major cryptocurrencies. Bitcoin's up over 7%, hitting, wow, $82,128.
Big number.
And Ethereum showing even more momentum, up over 11% to $1,621.
Yeah, ETH is really moving.
And it's not just the big two, right? BNB, Solana, XRP, they're all showing solid gains too. What's your take on this broad upward trend?
Well, what's interesting here is the synchronicity. When you see this kind of widespread positive movement among the established players, it often signals a broader market sentiment shift, maybe driven by renewed investor confidence or perhaps easing macroeconomic concerns.
Right.
And the strength in ETH and Solana that suggests a particular appetite for assets with, let's say, strong growth narratives or, potential for further development.
And okay, here's where it gets really interesting, I think. The meme coin market.
Yes.
It's showing some serious volatility, but also upward momentum. Shiba Inu, Pepe, Bonk, Dog with Hat, Popcat, they're all seeing double-digit percentage increases. Right. Popcat's really taking the lead with a massive 28% jump.
Yeah, that's huge.
What do you make of these kinds of surges? Is there anything insightful for our listeners beyond just, speculative frenzy?
That's the key question, isn't it? I mean, while it's easy to dismiss meme coins as purely driven by hype, their movements can sometimes act as a sort of a barometer for overall risk appetite in the market. When you see significant capital flowing into these highly speculative assets, it can indicate a broader sense of, well, exuberance.
Right, exuberance.
But, like you said, the volatility is extreme. Fortunes can reverse very, very quickly. So for listeners, understanding this dynamic might inform your assessment of the overall market sentiment, but it's crucial to remember these gains often aren't based on, fundamental value.
Definitely worth keeping in mind. Okay, moving on to the regulatory front. There have been some notable developments in the U.S. The SEC has approved options trading on spot Ethereum ETFs. Now, for someone less familiar, what's the big deal here? Why does this matter?
Right. What's truly insightful here, I think, is the signal this sends. Options trading isn't really for casual investors. It attracts sophisticated institutions.
Okay.
So this move suggests that major financial players are increasingly viewing Ethereum not just as like a speculative asset, but one with established market mechanisms. It could pave the way for more complex, diverse financial products down the line, similar to traditional commodities or equities. Essentially, lets investors bet on the future price of these ETFs without directly owning them. Opens up more ways to profit or, hedge risk.
Got it. And we also saw the confirmation of Paul Atkins as the new SEC chairman. He's described as crypto-friendly. That's got to have some implications, right? Could we see a significant shift in how the U.S. approaches crypto regulation?
It certainly could. I mean, a chairman perceived as crypto-friendly might lead to a more, let's say, accommodating regulatory environment for the industry. It raises an important question, doesn't it? How this shift in leadership could influence the pace and nature of future regulations, potentially fostering more innovation, more clarity. Right. But it's also important to remember, regulatory bodies often have their own inertia. Significant changes might take time. We'll have to watch the actual policies, the enforcement actions.
True. Actions speak louder. And it seems the U.S. House is also pushing for more crypto regulation this year, hearings reigniting the effort. The more clarity we get, the better, I would think.
That's a common sentiment, yeah. And you're right, clear, well-defined regulations can provide the stability and legal framework needed, attract investment, encourage responsible innovation.
So what aspects are most critical?
Well, things like consumer protection, anti-money laundering standards, and just classifying different crypto assets, those are particularly critical. But striking the right balance is crucial. You don't want overly restrictive rules, stifling innovation, or pushing activity elsewhere.
Yeah, that makes sense. And we're even seeing movement at the state level now. A bill proposed in Florida to invest in Bitcoin, hearing set for April 10th.
Right.
That's pretty forward-thinking, perhaps. What does it say about Bitcoin's growing acceptance?
It certainly indicates a growing recognition of Bitcoin as a potential investment asset, even at the governmental level. For listeners, this highlights how Bitcoin's narrative as a, store of value is gaining traction beyond just individuals and corporations. This first hearing will be crucial. Understanding the specifics, the potential implications for the state's investment strategies, it's a sign Bitcoin's being considered within traditional financial frameworks.
Interesting. Okay, switching internationally, Ukraine's SEC proposing a significant 23% total tax on crypto income. That's quite high.
It is, yeah. Stark contrast to some other places. It really illustrates the diverse approaches to crypto taxation globally. A 23% rate is significant, could potentially impact adoption and innovation within Ukraine.
How so?
Well, it might incentivize individuals and businesses to relocate or find ways to operate outside that tax regime. It just highlights the importance of understanding the regulatory and tax landscape in different jurisdictions, especially if you're involved internationally.
Good point. And Thailand is tightening its grip on P2P crypto trading by overseas operators, trying to keep things local, it seems.
Yeah, that aligns with a broader trend of governments wanting to regulate and monitor crypto activities within their borders. Focusing on overseas operators suggests an effort to protect local users from, potentially unregulated or illicit activities and ensure trading adheres to local laws and taxes. It's a kind of financial sovereignty.
Right, okay. Let's shift gears then to market dynamics and events. We saw ETH and SOL surge after a pause in Trump's tariffs. That suggests a pretty direct link to macro factors, doesn't it?
It does indeed. That immediate positive reaction suggests a growing sensitivity to broader economic policies, international trade relations.
So crypto isn't in a bubble, basically.
Exactly. Investors are viewing crypto as part of the larger global financial landscape, reacting to events that impact overall economic growth and risk sentiment. So, yeah, you need to consider macro news alongside crypto-specific stuff when looking at market trends.
And tying into that, Goldman Sachs actually scrapped its recession forecast as these tariffs were paused.
Right.
That broader economic outlook could definitely be playing a role in investor confidence across all markets, including crypto.
Absolutely. A more optimistic outlook, especially from a major player like Goldman, can contribute to more risk-on sentiment. That often helps assets like crypto. These forecasts influence investment strategies, capital allocation, but, they're not always accurate, and many other factors influence the market too.
Always caveats. Now, here's an interesting story. Bybit apparently doubled its market share after a hack due to retail liquidity. Can you believe that?
It is fascinating, isn't it? It suggests that despite security incidents, things like strong retail user engagement and available liquidity could be huge for recovery and growth.
So people care more about trading than security.
Or perhaps they trust the platform has fixed things. It also highlights the importance of trust and community in crypto. It raises that question, yeah. Are users prioritizing ease of access over security concerns, or do they believe the platform addressed the vulnerability?
Interesting dynamic. We also saw Magic Eden acquire the crypto trading app Slingshot. Magic Eden, the NFT marketplace.
Right.
That looks like a move to expand their reach beyond just NFTs, right? Into broader crypto trading.
Exactly. This acquisition points to a trend of consolidation, increasing competition within the crypto trading infrastructure. Marketplaces and platforms are looking to diversify, capture wider user segments by integrating different functions.
So good for users, maybe. More integrated experience.
That's yeah. Could be more features, more services as these platforms combine their strengths.
Now, this caught my eye. The ETH-BTC price ratio hit a 4-year low, and there's a bearish pattern suggesting further downside. What stands out to you about this?
Yeah, that's a crucial technical indicator. A 4-year low in ETH-BTC suggests a period of relative underperformance for Ethereum compared to Bitcoin.
And the bearish pattern?
From a technical analysis view, it suggests sustained selling pressure on ETH relative to BTC. For listeners, this might mean traders are currently favoring Bitcoin's, let's say, stability or store of value narrative over Ethereum's more complex, evolving use cases, at least short to medium term.
And that could affect DeFi and NFTs.
It could have implications for relative capital flows into those ecosystems, since they're largely built on Ethereum.
Okay. On the mining front, Bitcoin mining expansion in the U.S. is apparently at risk due to tariffs on equipment imports. That could reshuffle where mining happens globally. Why does the geography of mining matter?
Precisely. Tariffs on specialized gear can significantly hike costs for U.S. miners. Makes other regions with lower costs more attractive. This could indeed lead to a shift in the global distribution of Bitcoin's hash rate.
And why is that important?
Because the geographic distribution of mining can impact network security and decentralization. More concentrated mining power in fewer regions could raise concerns about, potential censorship or control.
Right, decentralization is key. And in terms of real-world use, VanEck is reporting China and Russia are settling energy trades in Bitcoin.
Yeah.
That feels pretty significant for Bitcoin's adoption as a medium of exchange, maybe beyond just digital gold.
It's definitely a noteworthy example. Bitcoin being used for practical, large-scale transactions between nations. If this trend continues, it could bolster Bitcoin's legitimacy and utility.
A potential evolution, then.
Potentially, yes.
Yeah,
Though it's still early days, and there are obvious geopolitical factors to consider.
true. Okay, circling back to tariffs quickly, even with the pause, China got hit with a 125% rate, and Bitcoin reclaimed 81K amidst the pause news.
Right.
It really does seem these policies have a direct impact. What's the key takeaway?
It just reinforces that interconnectedness, global economics policy and the crypto market.
Yeah.
The market reaction highlights how macro factors influence sentiment and price. So the key takeaway is, don't view crypto in isolation. Consider the broader economic and political landscape.
Makes sense. We're also seeing more traditional finance involvement. Citadel-backed EDX markets partnering with BitGo for crypto custody.
Another step, yeah.
That feels like another big piece of the institutional adoption puzzle, right? Why is custody so crucial?
Absolutely. Established players like Citadel getting involved, needing secure custody from firms like BitGo. These are key indicators of institutional infrastructure being built. For listeners, this means larger, regulated entities are getting more comfortable holding and trading crypto. That could bring more stability, more liquidity in the long run.
And custody gives them the security they need.
Exactly. Institutional-grade custody provides the security and compliance assurances these large players require.
Okay. Now, Polymarket is predicting Solana's path of least resistance in April is $80. That's quite a bit lower than now.
Uh-huh.
How should we interpret these kinds of prediction market things?
Well, predictions like these offer a glimpse into market sentiment. Maybe short-term expectations based on the collective wisdom or speculation of participants. But crucial to remember, they are not guarantees. The market is unpredictable.
So just another data point.
Exactly. A useful data point to consider, but definitely not definitive financial advice.
Got it. And Glassnode data suggests the recent Bitcoin sell-off is putting midterm holders under pressure. What does on-chain data like this tell the average investor?
It indicates that a chunk of investors who've held Bitcoin for a moderate time are now potentially facing losses. That can influence their decisions, maybe contribute to more volatility.
So what's the lesson?
For listeners, it highlights the inherent risks of volatile assets, the importance of a long-term perspective, and understanding your own risk tolerance.
Right. And the political discourse keeps going. Maxine Waters criticized Trump's crypto ventures in a House hearing. Crypto seems to be popping up more in politics.
Yes. As crypto gains prominence, it's natural it becomes a topic of political discussion, scrutiny. These comments highlight different viewpoints, policy considerations around digital assets.
Why is this political attention significant?
Because it can ultimately shape the regulatory environment, the level of government support, or opposition towards the crypto industry. It matters long term.
Okay. Finally, a headline asks, as China hits U.S. goods with 84% tariffs, Bitcoin falls to 76K, will the Fed intervene? So what does this all mean? Big picture, the relationship between traditional finance and crypto.
It really just underscores that complex interplay. Global economics, geopolitical tensions, the crypto market, the potential for tariffs to impact Bitcoin's price, the question of central bank intervention. It highlights the evolving relationship between TradFi and digital assets.
So Bitcoin isn't totally separate.
No, it demonstrates that Bitcoin, while decentralized, isn't entirely immune to macroeconomic forces and government policies.
All right, let's maybe move on to some project and platform updates then. GeoEsh is teaming up with NetX to boost the Akinaki blockchain's speed and scale. Why is boosting speed and scale always such a big deal?
Exactly. These kinds of partnerships, tech upgrades, they're crucial for continued development and adoption. Addressing issues like transaction speed and scalability, those have been limitations for wider mainstream use.
It's faster and cheaper.
For users, yeah. Faster, more scalable blockchains mean potentially lower fees and the ability for these networks to support more users, more complex apps.
Okay. Binance launched LDUSDT combines futures trading with earn rewards. That's interesting.
It is an interesting mix.
What are the potential benefits and, maybe more importantly, risks for the average trader?
Well, it offers a way to engage in leverage trading, which can amplify profits, sure, but also significantly increases the risk of losses, big losses.
And the earn part.
Might offer some passive income, but it's really crucial for users to understand the underlying mechanisms. And the potential for liquidation in futures trading is very real. So it's a reminder, carefully consider the risks with leveraged products. Only participate if you fully understand the mechanics.
Good advice. Exion is expanding its Tezos support as an Etherlink validator. That sounds like interoperability.
Yes, exactly. It strengthens the Tezos network and its ability to interact with other blockchains. Contributes to that growing trend of interoperability.
Why is interoperability such a focus now?
Think of it like different computer systems finally being able to share files seamlessly. It just opens up a lot of new possibilities. For users, greater interoperability means a more connected, efficient crypto ecosystem. Potentially new apps and use cases leveraging the strengths of different blockchains.
Makes sense. We saw the Partiti price jump on news of a new OKX USD trading pair helped its recovery. Really shows how exchange listings can impact smaller coins, doesn't it?
It absolutely does. Listing on a major exchange like OKX significantly increases visibility, accessibility, often leads to more trading volume, price appreciation, especially for newer or smaller projects.
So keep an eye on listings.
It can be significant, yeah. But also be aware of potential pump and dump scenarios that sometimes follow these listings. Caution is needed.
Right. Always caution. On the flip side, Virtualist Protocol's revenue has apparently plummeted, and their virtual token is nearing oversold territory.
Yeah.
A reminder of the risks involved with individual projects. What can investors learn here?
It just illustrates that inherent volatility and risk. Declining revenue, falling token price. Could be market competition, project-specific issues, lots of things. For listeners, it's a crucial reminder. Do thorough research. Understand the fundamentals of the projects you invest in. And diversify. Mitigate the risk of any single asset blowing up.
Diversification, key message. Now this feels big. MasterCard teaming up with Kraken to expand crypto payment services across Europe.
Yeah, that's significant.
Feels like a major step towards mainstream adoption for everyday transactions.
It is. This collaboration between a huge payment processor like MasterCard and a major exchange like Kraken really moves towards integrating crypto into mainstream finance. Makes it easier to spend crypto.
But are there still hurdles?
Oh, definitely. Regulatory clarity across different European countries is one. Consumer education and trust is another. And, the volatility of crypto prices for everyday payments is still an issue.
Okay. Hedera integrated Chainlink Oracle for cross-chain interoperability. For someone not super technical, what does this practically do for Hedera?
Okay, think of Chainlink as a secure bridge. It allows blockchains like Hedera to access real-world data price feeds, weather info, whatever. So integrating it enhances Hedera's ability to interact with data from other blockchains and the real world. Opens up new possibilities for decentralized apps on their network.
Making apps smarter, basically.
More versatile, yeah. Able to respond to real-world events. Could lead to more sophisticated, useful dApps on Hedera.
Gotcha. Wayfinder's Promptee token went live on OKX amidst an airdrop claim. Airdrops seem pretty common for new projects.
Very common strategy, yeah.
What's the goal? Just giving away free money.
Not exactly. It's a popular way to distribute tokens, build a community, increase awareness. By giving away tokens, projects aim to get them into many hands, encourage initial adoption, generate buzz.
So, worth participating.
Can be a way to get new tokens early,
Yeah.
potentially, but also be very cautious of scam airdrops. Lots of those around.
Right, diligence required. And finally, Story's IP token is apparently eyeing $5 amid Binance listing hype and ecosystem growth. Seems like listings and project development are still major price drivers. How much is real growth versus just hype?
That's the million-dollar question, isn't it? The anticipation around a big listing like Binance plus positive project news can create significant hype speculation, drives prices up. Disentangling genuine fundamental growth from pure speculation is challenging, especially short-term.
So what should people look for?
Look beyond the immediate price action. Assess the underlying tech, the team, adoption rates, real-world use cases. That helps determine the long-term potential rather than just riding the hype wave.
Solid advice. Wow, okay. We've covered a lot of ground in this deep dive.
We certainly have.
From significant price movements and regulatory shifts to interesting project developments and those potential macroeconomic influences.
That's a lot to track.
It really is. The crypto market remains dynamic, and understanding these interconnected factors is, well, key to navigating it effectively, I think.
Absolutely.
Hopefully this has given everyone listening a clearer picture of what's happening right now and maybe some food for thought.
Hope so, too.
And remember to join Daily Crypto for real-time market updates.